you get penalties, fines, and possible jail terms. I haven't seen that jail term. Have you, Warren?
No.
No. Yeah. Jail term. Scary. Okay. So if you fail to act in accordance with the trustee, also other members can take legal actions against you. Say if you fail in something, you know, your kids, I don't know, depending on the relationship, you can take legal action against you too, or maybe your friend, or whoever. If you're not following the thing. Yes?
The first point there you've got, if you did not comply, you'll honorably tax the 46.5%, and half will go to the government. Half of what?
Half I mean is 46.5% tax. Say if you have $1 million in the super fund, 465,000 tax will go to the government. That's nearly half. That's what I'm trying to say. Get it?
So yes, so that 46.5% will go to the government.
Yes, that's right. So half goes to the government. 46.5% will go to the government. So another reason, like this is the things that a lot of people have self-managed super fund and they do nothing with it because you have such a great investment choice. But you have to have an investment strategies. So you can invest in property in Australia, in US. You know what Warren was saying, that you can use the self-managed funds to buy the US property or properties in any of the country that you want to. Or you can buy commercial. So there's a lot of, and then the fact that you can leverage, you can borrow, you can use other people's money to invest in property, it's even greater, like it's even better, right? So you have that choice, and then you can invest in shares. You have Australian shares, international shares, or you can go into options and capital calls and things like that. And Warren was asking about the derivative, and you have to have another risk management documents to attach to the investment strategy if you want to do that. So you can invest in unit trust management funds inside Australia, outside international. You can put the money into cash, term deposit bonds, or you can art on antiques and all that. You can. Okay, so you can invest in whatever that you want, depending on your investment strategies. Do you like that? Clever, huh? I enjoy my slides.
Are you international? Are they prescribed investments that have to be within? When I say managed funds or international managed funds or international shares, they have to be. Is there a set list of shares that you can invest in?
No.
So any internationally, any share in any country, in anywhere in the world.
Yes, you can, and you have to make sure your investment strategies allow you to do that, and your trustee also sort of allow you to be able to invest in that. But whatever you do as a trustee, you have to have the responsibility to do your own due diligence. You don't just go and invest it. Oh, I want to invest that. You have to be able to justify to other members, like, why did you actually want to invest in that? And you have to, it's called sole purpose test. It's like, you have to invest it for the purpose of retirement and also act in good, for other members as well,
sure.
Right?
So, if all the members are happy with the investment,
sign off,
sign off,
yes.
Good idea to invest in an ABC company in Burkistan,
yes.
who may be going to dig an oil well over there, and for some reason it doesn't come off and it's lost the money. And the members go, yeah, well, that's okay, we realise it's risky.
Yeah.
Will the authorities come in and say, hey, that was a silly investment? As long as, so is that investment strategy up to the trustee to make that up?
Yeah, you can do it every year. At the auditor, what happened is that, because I'm also auditor as well, but I don't want to do that anymore. What happened is that we look at the investment strategies, we look at the trustee, and we look at the financial accounts. We see where did they go and invest in that? Is that allowed in the investment strategies? If it's not in there, and they go and just go and, say for example, the investment strategy didn't say that they can invest in property, like residential, and then went and bought some property, then they're not compliant. We have to mark that off. They're not compliant. So they're in trouble.
That's because it's residential, not because it's property, is that what you're saying?
No, because in the investment strategy, we didn't specify that you are going to invest in the residential property. You don't have the state, because the investments, you have to have the investment strategy before you invest. You have to have that plan before you invest. Do you understand? You can't So you have to have that investment strategy is very important. You have to have that. It's just like a plan before you go and invest. So if you say, yep.
So my question is on that, is the investment strategy prescribed to you by the government what it should be?
No.
You make it. So I can have an investment strategy as a trustee,
yes,
and want to go and invest in Jupiter's company overseas. And if I say, and if all the members are cool with that, then we can say, well, screw you government, we've got no say in it. Is that what you're saying? That's a ridiculous.
No. Nobody can guarantee the return. Nobody. I mean, when we're going to invest in something, we always hope that it's going to be good, but nobody can predict the future, can know what the return will be. But at that moment, at that time, all the trustees agree that that's what we're going to invest, and it's documented in investment strategy. That is good enough. And whether that money is all gone, it's not. It's the tax office is not going to say, you know, why you lost the money. No.
So this investment strategy document has to be submitted to someone.
The auditor will require that to have a look.
Okay.
So at the end of the year, the administrator, like the accountant, will have to prepare the financial account and tax returns. Then the auditor of the self-management fund, the qualified auditor will tick off all the checklists. Then we'll have we have 5 pages checklist. We have to check and all that. And you have to show it to the auditor, the investment strategy document. So I'm going to go through it. When we're going to use it to invest in property, I'm going to go through the 20 things that you have to know, okay?
Just a quick one. So, what do you think of gold and silver in super funds?
Oh, yeah, we can too. Yeah, I did put that in. Yes, we can.
I think it's great.
Yes, gold and silver. Yeah, yes. Yes, you can transfer your commercial property into your self-management fund by a few ways. You can transfer in, say for example, the property is worth $1 million, right? And you only have maybe 100,000 in the self-management fund. There's a certain way to transfer that commercial property into the self-management funds by using the concessional, non-concessional, and also by using the borrowing, the bare trust. So there's a few ways to put it in. If you put it, so if you put it into the self-management fund, and then say the property is worth $1 million, right? And if it satisfies the what we call small business exemption, you can also get the capital gains tax free. So the property go into the self-management fund, and then you turn 60, and then you decide you're going to sell it for, say, $1,200,000, and you make all this capital gain, you don't have to pay any tax. If you are a property, for example, you own 7 or 8 properties, and you classify as a property management, it's like a business. Like if you have 1 or 2, it's hard to transfer in. But if you have, say, 7 or 8 residential property, and your main job is like a business that collecting rent, we can apply that as like, this is a commercial. This is like a commercial. It's the 8, as a group, 8 property, you move it all in. There's a way to do it.
Will that trigger capital gains once the moves in?
Yes, it will. That's why we have to calculate it carefully. Some does, some not, depending on the strategies that we use.
I want a quick question for you.
Yes.
Let's say, you know how you can transfer shares to a super fund? So let's just say before retirement, you've got like $300,000 shares, and you think, well, I've got it in my super fund, then eventually it might come and calls on it, and eventually maybe you have capital gains in retirement or whatever. Let's say there's capital gains on it now, okay? You know how with super you can give a certain amount as a local contribution. I think it's like 50,000 a year over 55. Was 50 over a certain age?
100. You have concession contribution is 25,000. It's tax deductible. Non-concession is 150,000. And if you're under 65, you can push like 3 years forward, so you can put 450,000.
Yeah, so 75,000. Let's just say, does that mean, let's say if you transfer $300,000 shares in, you can still get $75,000 tax deduction for those shares to reduce your capital gains tax?
If you transfer, no, because the share is in your name, so when you transfer, it's just like you sell to the self-management fund, so you're going to make the capital gains tax. Yeah. So it will tax under your individual.
And then can you also get $75,000 deduction for transferring the shares in the self-management?
75,000.
Yeah, basically 3 years times 25,000.
No, you can't do that. No,
okay.
no. Deductible contribution is year by year. It's 25,000 maximum. Yeah, if you go over, you're going to get taxed at 46.5%. So be careful. I'll cover that as well. So I mentioned it this morning. I say saving alone, it does not going to give you. It's not going to give you wealthy. Right? It's not going to make you rich. So because of the inflation. Okay, you all get that, right? This is very important. Yeah, so trustee of a self-managed fund must document and follow an investment strategy before they invest. Remember Andrew asked me all these questions? You have to have that document before you invest. Before, okay, before. So the date has to be right. So all these rules, like you know it's before, after. Then when you look at the date, you make sure it's before. Get it?